Apart from fundamental analysis, considering companies and fundamentals as it relates to its financial statements, another important aspect of investing is the investor's mindset. Our mindsets will go a long way in contributing to our overall stock market performance. So in this video, I want to talk about how you can master your mindset, a kind of psychological preparedness for stock market success. So psychology, mindset, behavior, behavioral biases are key factors that we must understand that influences stock market performance to a larger degree. So psychological preparedness is a critical but often overlooked aspect of successful stock market investing. It involves developing a mental and economic or emotional resilience to navigate market fluctuation, and to be able to make rational decisions and stay committed to your long-term goals. So here are, key components of psychological preparedness for stock market success. And so we want to present this in a condensed format. Number one is understand your risk tolerance, because you cannot divorce the stock market from risk. All right. When you mention the word stock market, the next, factor that comes into mind after profits, after returns is risk. And then you need to understand your risk tolerance. So assess how much risk you can handle based on your goals, your time horizon, as well as your emotional capacity to manage losses. Do you have what it takes to really manage losses in the market? Do you get discouraged or you give up investing because you're not able to manage or stomach risk? So you need to critically assess your risk tolerance. Number two is set realistic goals, expectation. Set realistic expectations. Stock market returns are not guaranteed. So expect something within the range of 7 to 10%, but be prepared for the short-term volatility you will need to encounter. All right. So overall stock market returns generally are in single digits, between 7 to 10%, 7 to 9 to 10%. Don't expect something very high like 30%, like 40% in a given portfolio. No, that's an overly ambitious expectation. Please learn to manage your expectation. Learn to manage your expectation. Put your expectation under control, or else you may end up getting disappointed. You may end up not getting what you need to obtain at the end of the day. Number three is control your emotions. Control your emotions. You should learn to divorce. Investment is a serious business, a serious matter. So keep emotions aside. All right. Be impervious to emotional influence. So you need to avoid fear during downturns and greed during rallies. So emotional decisions can lead to, buying high during, market euphoria and selling low during market panic. And so divorce yourself from any kind of emotion as much as possible. Number four is develop patience. Investing requires a long-term, mindset. So avoid frequent trading or chasing short-term gains. People like Warren Buffett have been investing for the past 50 years, over 50 years. So have a long time horizon so that you not end up making decisions that will hurt you in the short term. So develop patience. Number five is practice discipline. Stay disciplined. And you discover that You need to stick to your investment plan, even during market volatility. And so avoid impulsive mistakes. Don't allow impulse to control your investment behavior. Don't buy or sell based on panic or greed or fear. Maintain discipline. Number 6 is avoid hard mentality. Avoid hard mentality. Maintain a kind of contrarian stance when it comes to investing. Don't blindly follow the crowd because the crowd may not be right all the time. Investing is not a democracy where majority carry the vote, where majority tends to be right. No, sometimes you need to stand alone, you need to walk alone, you need to maintain a contrarian approach. When stocks, when a particular stock is falling at a faster pace, ask yourself what actually is the problem. Look at the company's fundamental. If the fundamental is still okay, if the narrative is still strong, go ahead and buy. If you bought already, go ahead and increase your position. Forget about what the crowd is doing. Number 7 is educate yourself. Please subscribe to this channel and like this video because I am here, educating you. What I just want is essentially that subscription, all right, and that's liking. You like the video and the channel, it will do me a ton of good. So you discover that the more you learn, the more you earn. Actually, your knowledge level will determine the level of your overall performance in the market at the end of the day. And so you learn about the stock market and invest, and investment principles to boost confidence and to make informed decisions. And based on my experience, so if I discover that knowledge is power when it comes to investing. I've been investing for the past 18 years. And so based on the knowledge I've acquired so far by God's grace, I can take investment decisions within a very short period of time. I know what to sell. I know what to buy. All right. These are the basic knowledge you need in the market as an investor. And you need to study. You listen to channels of this nature and other investment channels. You can't do without knowledge. Okay. Number 8 is prepare for losses. Losses are parts and parcel of what we need to expect in the market. So you prepare for losses. Accept the losses, as part of investing. That's the education. When you sustain losses, that's the school fees you are paying. So focus on analyzing whether your investment thesis has changed. Number 9 is focus on long-term goals. You must focus on the long term. Avoid short-term market fluctuation. Avoid short-term market decision making. And so ignore daily market noise and concentrate on your long-term objectives because the market is efficient in the long term. Number 10 is use a support system. Seek advice from financial advisors or mentors to reduce stress and enhance decision making. Personally, if I'm not mistaken, I've watched materials related to Warren Buffett's, let's say more than 70% of what relates to Warren Buffett in the on YouTube. Every material, every video that relates to Warren Buffett, I think if I'm not mistaken, I watched over 70% of them over the past 18 years. And that has really helped me a lot as an investor. A lot. So have mentors, people like Warren Buffett, the late Charlie Munger, and all those top portfolio managers, in the industry. I have this channel I watch regularly, and it's called Well Track by Consuelo Mark. In fact, I've watched almost all the episodes. Almost all the episodes. you know. So you need to be conversant with what the professionals are doing. You learn from them. I've watched interviews with hundreds, if not close to 1,000. I've lost counts. I've watched interviews on YouTube where all these big fund managers are being interviewed on YouTube. I've watched virtually, in fact, many of them, hundreds of them over the years. All right. So on average, there's hardly a day I don't watch, you know, uh, stock investment related material on YouTube for the past 18 years. So it has gone a long way in boosting my knowledge as an investor. At least I know what to buy and I know what to sell, when to buy and when to sell. So when I, had the idea of setting up this channel, I just want to share my knowledge with you. And that's why I encourage you to watch all the videos in this channel. You will never remain the same. You will acquire the knowledge you will need to really perform very well as an investor.